Hi guys, welcome to Monetize. I'm going to record the weekly forecast video for the week starting on September 19th. So let's begin with US 10Y. This time I'm beginning with US 10Y, which is US 10-year bond yield chart because it is highly correlated to dollar index. US 10Y. Starting from monthly, on monthly everything looks bullish for US 10Y. MACD histogram still open to the upside, even the MACD lines, and we do not have any bearish signs on the monthly chart as of now, though it has cleaned the area, which means it has broken the high, the previous one. So let's see on weekly now. Weekly, it still looks bullish to me because the MACD lines cross is still to the upside, a bullish cross, and we have a rising green histogram, which means still we have room to the upside. Let's check as per trend based fib extension tool months. So all right, it has reached the fib extension 1.61, which is a critical juncture as per the fib count, and if we follow the fib numbers, the cycle is usually completed around fib extension 200%. So here the case is this one, so we still have room to the upside. Let's quickly check on the daily. Again, the last candle printed on the daily chart is a doji one with MACD histograms slightly shrinking to the downside. The MACD lines, they have started curving, so a slowdown scenario is visible. So I still feel we have room, one more push to the upside. We have room towards the upside, and it may clean the previous high because the previous highs are still intact, so it has not cleaned. It may take the orders from here and then push to the downside. So everything looks bullish on the daily as well. For hourly, we have a different scenario. So we have bearish divergence in play. Just divergence in play means the divergence is visible, but we need a break below this level, which is 3.38, to confirm the bearish moves. So until 3.38 is intact, I will not say that it has turned bearish. So maybe we may find a small time push to the downside and then continuation higher to clean the orders above this high, and then it may complete one more fake high with bearish divergence and continuation to the downside for small time correction. Ultimately, the higher time charts, they are still bullish. No direction on the 1 hourly chart, exactly like sideways. So 50-50 scenario on 1 hourly chart. Let's quickly have a look at dollar index. DXY. Okay, so monthly looks bullish to me. MACD histograms, they're rising. Even the MACD lines, they're open-ended and they're rising higher. What's happening on the weekly? We have a slight slowdown scenario because we still do not have Okay, slow down on the MACD histogram, but not as per the MACD lines. So MACD lines, they're still open-ended and they have not curved to the downside. They have not given a bearish cross as of yet, as of now. So last official base is here, and the breakout structure to the upside is here. So what's on histogram, sorry, Fibonacci, starting from here, perfect bounce from Fibonacci retracement 50% zone. Quickly move down to daily. Do we have anything? Okay, higher high formation with a lower high. Okay, so we have bearish divergence on the daily. So as per bearish divergence on the daily, we need a break below daily structure level, that is below 104.67. It's quite far from the current levels, so doesn't make any sense. So what we can do, daily is just under bearish divergence, nothing more than that. So what we can do, let's quickly move to 4 hourly. Higher high, lower high on MACD, bearish divergence, and do we have a break below the structure on 4 hourly? Yes, seems we have a break below the structure. So this is the structure area. We got the structure area on 4 hourly, a break below, and okay, after that a push higher, which is maybe this could be the scenario, a push lower, and it could be a ranging structure to the sideways. Okay, maybe like this for coming week, because we have Federal Reserve's interest rate announcement coming up on 26th of September. So I think till 26th of September, the market is not going to give a clear direction to us. It may keep on consolidating in our sideways structure, sideways consolidation phase, and then it may give a new breakout either to the upside or to the downside, because the higher time frames, they are still bullish. Let's look at what's happening on lower time frame. Bearish divergence, a break below this level, that's 109.27, will open doors to retest this area, that's around 108.20 or 108. Maybe one more push lower and then continuation higher. I'm still not very clear on the charts, but only on the short-term basis I can see it coming down due to this bearish divergence. That's it. Let's quickly move to gold. Gold weekly. Weekly is clearly bearish because of this break of structure. So we have a bearish break of structure, and we also have MACD histograms pointing downwards with full bearish power, and even the MACD lines, they're open-ended and they're pointing to the downside. So weekly is bearish. Daily, so as per daily, This is the previous high, and this is the structure which is broken. We have marked the previous high, we have marked the structure, previous high, and the structure. Okay, now histograms, they are still pointing downwards. Even the MACD lines, they are open and they are pointing downwards. Let's move to 4 hourly. Don't think like the bearish pressure is over, maybe just a retest, because as per the rule, after the breakout structure, market always moves for the retest. So let's mark Feb levels. Moving to 4 hourly. From this area, that's here, it's a big bearish candle which filled the bearish orders. So okay, imbalance zone, because we have a lot of bearish orders here, and as per the Fib count, this is 78.6% Fib retracement zone. So a good probability that market may push higher towards 1717 or towards 1720, and then continuation lower after the announcement of the new interest rates from the Federal Reserve on September 26th. Let's see on 1 hour. As per the MACD lines, we do not have a bullish divergence, but only as per MACD histogram from here to here. This is the previous high, which should be broken, so I doubt. So there could be a good scenario, there could be a good probability that it may touch 61 and roll down. Worst case scenario, it may reach, best case scenario, it may reach 1717 and roll down to clean the orders from here of the early sellers, and then a push to the downside. But ultimately, I'm looking for the downwards direction. So the plan is, in the short term, in the upcoming week, if you get an opportunity to join this bullish, short-term bullish trend, you may do so with the stop loss. Okay, so this is 1657. So you can protect your buy side for the short term with a stop loss below 1657. First target could be 1694, followed by 1704, and the best case scenario, the bullish side, it may take towards 1717 or 1720 in the round number. Okay, now the next instrument we are going to take is NIFTY, SGX NIFTY. NIFTY is in a sideways consolidation. This is the previous high, not yet taken, so there is a good probability that the market should go higher, clean, and then come back. So let's clearly mark the levels. One is 18225 and the next one is 18381. And the final one is 18599. Okay, so let's focus on the first two levels, that is 18225 to 18381. Again, this is the base from where the final push happened. This one with bearish divergence. Now the problem here is after this bearish divergence on the daily time frame, it was required to break below this level, that is 17,239. To round it off, we can say 17,240, which never happened. So we still have a probability of it going higher and cleaning the previous highs. On the 4-hourly, yes. So perfect. So we have this high. Let's mark Fib extension 1.27, 200% coming again at the same level. So maybe a ranging structure for a while until the new interest rates announcement is done. Going up, going down, same ranging scenario based on the current market structure. Quickly moving to 1-hourly. On the 1-hourly, okay, we have a bullish divergence as per the 1-hourly chart. Bullish divergence, we have a double top kind of pattern here. So let's do the Fib retracement from this high to the recent one. See, it may continue higher in the coming week until there is the announcement for the new interest rate from Federal Reserve, but the problem here is it has not cleaned this low. So I'll be cautiously approaching the buy setup. So one probability, if we open a buy position here, stop loss below, risk and reward is 2.5. That's pretty good. So okay, if you want to enter a buy position in the upcoming week, because for the short term I'm seeing the weakness coming in dollar index, which means a bullish scenario for the stock markets just for the short term. So we can target this trade in the upcoming week. So we have done US 10Y, we have done DXY, we have done gold, we have done SGX NIFTY. Next we can move on to NASDAQ. So US Tech 100. Weekly high still intact, not yet broken. Weekly break of structure. Then Fib retracement from this high. Bearish bounce exactly from Fibonacci retracement 61.8. Last candle is bearish engulfing, so everything looks bearish as per the higher time frame. Daily. daily we got a higher high formation, so contradictory scenario as per weekly and daily. We are still in between Feb retracement 61.8 to 78.6. Okay, so quickly let's move to 4 hourly. We have a slowdown scenario with continuing bullish divergence coming in play. So okay, so again, just like Nifty, if you want to target short-term buys, long position here, stop loss slightly below 78.6. Again, the risk to reward is 2.37, similar to Nifty. Okay, let's quickly move to some currency pairs. So I believe because dollar is going down in the upcoming week just for the short term, and New Zealand USD looks good to me for the short term buys. I've already marked it on my charts. I marked two downwards parallel channel on the weekly chart, and starting from the highest level, swing high on the weekly, I marked the fib extension as well. So we have reached exactly fib extension 2.618, and the bottom of the second downwards parallel channel on the weekly time frame. We still have bearish scenario on the weekly because the MACD histogram, they're still pointing downwards, and even the MACD lines cross, it's open-ended and it's still a bearish cross. So just for the short term, we'll be looking to capture the bounce from the bottom of this falling parallel channel. Yeah, so we have lower low, still open-ended, so it may complete bullish divergence in the coming week. For hourly, it seems it has completed bullish divergence. And as I've said, we are at the bottom of the channel, and fib extension 2.618 level, we can look to capture the short-term bias from here. I can also see a fake break of this area, fake break to the downside, and then a quick bounce up, which is a good scenario for the short-term bias. Let's quickly move to 1 hourly. On 1 hourly, we have a clear bullish divergence, and let's turn it into a line chart. So this is the structure level based on 1 hourly. Based on 15 minutes, it seems that it has already broken the structure to the upside. Yes, it has broken the structure to the upside. Push down, W pattern, clearing the previous lows, push to the upside, consolidation, and now moving up. So 15 minutes is giving a clear bullish scenario. So this is the breakout structure. So from the lowest level to the current levels, we can attack somewhere 61.8 Fib retracement area to 78.6. So assuming we capture the move around 61.8, let's keep a stop loss below the previous lows, and the short term, so 3.71 risk to reward. So short term target is coming from the previous top, this one. So just for the upcoming week, we can look to buy the dips in New Zealand US dollar. Let's do one more currency pair, a quick one. Let's do Euro AUD. As per weekly, it's clearly bullish. Double bottom, bullish divergence, and that's it. As per weekly, bullish divergence in play. Daily is again bullish because bullish divergence, and we also have the break of structure. Moving to 4 hourly now. On the 4 hourly, we have short-term bearish scenario. Short-term because it's still in the rising parallel channel with bearish divergence in play. So if we mark the fib from the recent low, assuming this is the recent high, so we can target, yes, this area just for the short term. So please keep in mind the higher time frame scenario is still bullish. So if you're going to play this short-term bearish trade, if you are going to take this short-term bearish trade, it's going to be a counter trend trade. So do it very, very carefully with a tight stop loss. Assuming we enter after the break of this structure, stop loss above the previous high, 2.85 is the risk to reward ratio. So guys, I hope I've covered many instruments like dollar index, gold, stock indices, and a couple of currency pairs. It should be helpful for you to trade in the upcoming weeks based on the levels and the structures explained in this video. And if you have any doubts, you can always get back to me. Guys, please show your support, give a like to this video, subscribe to my channel. It really keeps me motivated and helps in better circulation of my videos. Thank you and take care. Bye-bye.